What's up, guys? I welcome you in this wonderful video. So there is something interesting that I want to share with you. I am here opening step index. For the fact that I'm opening step index, it doesn't mean that this method only works with step index. So you can use this method in any assets that you are trading, more especially when it comes to synthetic assets. Now, when it comes to synthetic indices, this is one method that I've been relying on. And on other instruments, you can play around with all the bits and pieces of price action. But when it comes to synthetic indices, this is the specific method that I rely on. So as you can see here, price is moving down on a downtrend. Price is moving down on a downtrend, because usually when it comes to market movement, we either have an uptrend, a downtrend, or a range. So in this case, price is moving in a downtrend, and as it is moving in a downtrend, we have two options of finding our entries or of executing trades. We can either use let me remove you there. We can either use trend lines. I hope we all know trend lines. I will not explain them in details. We can either use trend lines, or we can take advantage of horizontal levels. So there are two approaches. You can either enter using a trend line or enter using horizontal levels. What do I mean by entering using horizontal level? It is using the common method which is known as a retest, whereby the support level changes and become the resistance, or the resistance level changes and become support. So that's what the retest is all about. So as you can observe here, as the price is moving down, I will just highlight some few levels here. I will highlight these levels here. I will highlight these two levels. So as you can see here, we have a support and again a support. And then in the near future, price bounced on these line, bouncing as some kind of a resistance. It became resisted in this same line which previously was support. So as you can observe here, that when price bounced on this line, it didn't just bounce once, but it touched it multiple times. It confirmed it multiple times, because sometimes it is risky to execute your trades when price just touched that line immediately. For an example here, we can see here that one trader can say, okay, I'm only using this support, and then price touches it, he begins to sell. When he begins to sell, price immediately goes up and breaks his entry level. So it's very, very risky, guys, to take a retest when it is just only a single touch. But it's better when it's multiple confirmation, because even when it gives you multiple confirmations, at least you will even have patterns. For an example here, we have this high here, which forms some kind of an individual resistance when it comes to this corrective. And even on the downside, you can connect these lows on the downside to get something which is going up. I hope that is making sense. So you can have your own pattern from just waiting for multiple touches when it comes to that retested support. Let us just go down. There is another example that I want to give you. So here we can see again here, let me extend this one. We can see again here that we have two scenarios. We have the first touch, which was instant, price touch and went all the way down. However, if you entered here, it is like that you're gonna make money, but it is not the safest way to enter. But here it is a little bit safe, because price, you can see it breaks that line and it starts to fall back again. It tries to goes up, it falls back again, and as it is falling back, you can see something amazing, that we have highs, and the highs, they become lower and lower. So you can see that we have now a falling some kind of a falling pattern. Even on the downside, the lows become lower and lower. So it is, the market gave you an opportunity as a trader to say you have an opportunity to enter anywhere in these highs, because the highs, they're becoming lower and lower, or even to enter on a breakout of this downward support level when it was retested all the way there. So you were given an opportunity to analyze and wait for the right time to enter, unlike in this area where you're being caught by surprise. So that what you have to make sure that you follow when you use this method. Make sure that when you plot your support or your resistance, make sure that you avoid the instant entries, because sometimes they are not genuine. In most of the cases, they are not genuine, and you are likely to face some kind of a false signal from them. And another interesting example, it is this one. Let me just extend here our support. So as you can see here, that we had our support, and then price in the near future it came, it tried to retest it, but it couldn't go down any further, and then it broke it going up high. Again, it tried to break it down, it failed going up high until it formed some kind of a pattern or a structure around this level, until it formed a structure. And when it is forming a structure, it is giving you an opportunity to get the most accurate entry you can ever think of, because once it gives you a pattern, it gives you something further to rely on, something to analyze, so that you get the entry that you are looking for. So now you are able to analyze this pattern inside or around this horizontal level, which acted as a support before, but now it will be acting as a resistance. And then once you have analyzed your pattern, you will know that you will wait for the pattern to be broken. And when the pattern is broken here, you can see that there is a minor retest, and then you can take advantage of the downward move by executing your trade all the way there. So what I wanted to emphasize on, I know that a lot of people know the method, but the main emphasis in this video, it is that make sure that you avoid the instant move, more especially the first one where the price just retests and starts to go down. Avoid those ones and wait for price to give you some confirmation, because when it comes to trading, we know that there's a downtrend and the sellers are a little bit strong. However, there will be some points where the buyers try to resist them or where the buyers try to challenge them. These are the cases of a corrective where the buyers try to fight the sellers, and then the sellers will try to continue their move. When they try to continue their move, it will not be just easy. So that's where we receive moves like the transition that we can see here, and then transition that we can see there, whereby the buyers and the sellers are fighting. So make sure that you wait for these areas where you will observe beautiful patterns. Then from these patterns, that's where you're gonna get the entry that you are looking for. I hope everything is making sense. So that's what I wanted to highlight in this method. This is a very, very profitable method that I use majority of my entries that I take when it comes to synthetic indices. So I believe that if you apply this method, it's gonna work for you. So let me just leave it here. Thank you for watching.